What's up, MTG Tribe? I'm Rick Petticelli here with some timely analysis you need to see right now. The Nasdaq 100 ETF QQQ just broke out to new all-time highs, and over the past few days has been chopping around in a tight range, digesting gains, which is constructive price action, so that we're able to act when these support levels hold. So in this video, we're going to walk you through how we identify the key support levels, and if you stick around to the end, we'll have a bonus where we'll cover a few of the better looking charts in the Nasdaq 100 that may be ready to push higher over the next few weeks. All right, so let's get right to the chart. We have the daily chart of the Nasdaq 100 ETF QQQ up, and we're going to run through each support level first, and then we're going to layer all the levels on top of each other and see where we can find a confluence of support. So first up, we're going to cover prior resistance levels that are now acting as support. So prior resistance would be the base high as well as prior swing highs that the price action recently cleared. So the base high is support at 503, and prior swing highs come in around the 499 to 500 area. Next up, we have trend lines that we draw from the first higher low here. And the price action does break down below the trend line, but notice how it gaps right back through that trend line. So we think this line's still valid, though some may draw it like this, and that's valid as well. But just for now, we're going to stick with this a little bit more steep uptrend line. So that has support around the 507 area, depending on when it touches. We also have support from a top trend line that was broken to the upside recently. That will offer support around the 506 area, and depending on when there's a touch, could be a little bit higher. So those are the key support levels based on trend lines. Let's go ahead and cover the moving averages. So for the daily chart right now, we only have the 8 and 20-day EMAs that are really in play in terms of support. And we have the 8-day EMA at 508 and climbing, and the 20 EMA around 500. That's a psychologically important level as well, the century level there. So the 28 EMA is also the line in the sand for us when we're talking about a chart that's in an uptrend. If we take a look back here, earlier this year, we have the price action holding the 20, strong uptrend. And then when there's a break of the 20 and a confirmed break, the next day breaks beneath the low of the day that breaks the 20 EMA, we have a confirmed break of the 20, and then bad things tend to happen. So good things happen above the 20, bad things below. Sometimes that leads to a new downtrend, sometimes just a shakeout and a quick recovery back above. But ideally, when we're dealing with the bull market, we want to see the price action above the 20-day EMA. All right, so next up are the Fibonacci retracement levels. And these levels are measured by taking the price action from the last wave up from the swing low to the recent swing high. So the key levels we like to monitor are the 0.236 and the 0.382, because these two levels, if they hold, are really a sign of strength. It's really a strong moving market if the pullback finds support at the 0.236 level or the 0.382. A pullback to the 50% retracement level is fine. That's a normal pullback. A deeper retracement would be the 618, and anything below that would suggest that the odds of the price action returning back to the prior swing low have increased. So it's fine to give back gains. We just, ideally, if the market's strong, we want to see this 0.382 level hold. So let's put all these levels back up and see what we have here. We have a lot of lines, but there's quite a bit of support here in the 508 area. So you can see we have the 0.236 Fibo and the rising 8 EMA and this steep uptrend line offering support around the 508 level. Just below that, we have this top trend line here, also has support around 506. And below that, we have confluence from the 0.382 Fibo level along with the prior base high. And likely if the price action does sell off, the 20-day EMA would push a little bit higher and also provide support around that 503 level. So if we're talking the QQQ is very strong, it's going to hold the 8-day EMA. A break of the 8 would suggest a pullback to this 500 to 503 area, which we'd expect to find support. A break of that level would suggest that something's wrong with the new bull market and that we could see a deeper correction and a possible test of this prior low. So there you have it. A quick and easy way to identify major support levels on the daily chart by using trend lines, prior swing highs, moving averages, and Fibonacci levels. And I'd like to mention something that's important about support levels. They're never just one line. You have to expect a little bit of an undercut possibly. So it's more of an area. And two is we're never predicting that the price action is going to hold up at the 8. We're just looking at these support levels and see how the price action holds up. If they hold, great. If they don't, then it's the next level. If the price holds up at the 8-day EMA, that's feedback to us telling us that the market's strong and it's going to probably push higher with the next few days. If there's a break of the 8, then we know that the market may need a little bit more time to digest recent gains. And then we'll have to see if the price can hold the 20-day EMA. If the price can't hold the 20, then we have to start cutting back exposure if we haven't already, and possibly even going to cash if charts begin to break key support levels in leading stocks. So the key levels to monitor again, 507 area minus some wiggle room. That's where the 8 EMA is. And then again, we have the 20 EMA that's rising around the 500, 503 area. Those are the key levels to watch. Well, thanks for sticking around through the end of this video. As promised, we're going to cover a chart that's potentially setting up in the Nasdaq right now, and that's Meta. A few other stocks such as Amazon and Netflix have taken off. Meta is still working on its base, but it's holding on to support from the 20 and 50-day moving averages. And if it can push higher from here, could have a shot of breaking this downtrend line and then exploding higher. We also want to note that the price action broke out from a lengthy base in October, didn't extend too much before it ran into resistance at 600. So the price action from April all the way to November here, pretty much just one big base. So the next move out from here, this long base could lead to a pretty explosive breakout if it can get going. All right, that's a wrap for this video. For more advanced technical analysis techniques, check out our previous video on breakout patterns showing on your screen now. Drop a comment below telling us which support level technique you find the most reliable in your trading. Remember, successful trading isn't just about knowing the levels, it's about executing properly when the price reaches them. Until the next time, trade what you see, not what you think.